Good afternoon, everyone. So we are going to get started in a minute or so. Meanwhile, people hop on. We will wait for some time. And meanwhile, you can drop your business name in the chat. We would love to know who all are there with us, and let's make this more interactive. I can see people hopping in. Hello, everyone. Hi, Chris. Glad for you to be here. Amazing. Okay, so I'm going to share my screen. Let me know if you are able to view that. Are you able to see my screen?
Yep.
Amazing. Okay. So again, welcome to today's webinar, people. This is Meet the VC with Michael Cardamone, Forum Ventures, presented by Early Growth. My name is Kushbu. I'm an event marketing manager with Early Growth, and I'll be your host for today. Just a few housekeeping notes for you all. This webinar will last approximately 60 minutes, including time for a question and answer at the end. You can place your questions in the Q&A panel at any time. This webinar will be recorded and sent to all of the registrants within 48 hours of this presentation. You can also find this recording and all previous webinar recordings on our YouTube channel as well. The link to it will be sent with the recording email. Tell you more about Early Growth. So before we get started, let me tell you more about us. At Early Growth, we have got the entire finance stack covered. What that means for you is really two things. First, you have got a strategic partner in growing your business. Our CFOs, with their years of experience and dozens of startup under their belts, help you see what's coming, be it good or bad, and take advantage of it. From strategic decisions to fundraising, they have seen it all. Second, our CFOs, senior accountants, and tax advisors take care of all of the blockings and tackling related to the day-to-day, month-to-month, and year-to-year of your finances so that you can focus in your business. Both Early Growth and our CFOs have been around the block a few times. We have helped and served over 5,000 clients coast to coast and around the world, approximately 40 countries. As always, our CFOs have helped our clients raise billions of dollars. We would love to help you and serve you as well. What we believe in delivering peace of mind by providing you all one-on-one solutions for all of your needs, requirements, including CFO services, HR, accounting, taxes, and insurance as well. We'd like to protect your profitability by giving you a whole sole point of contact to answer all kinds of questions and strategic dashboards to help understand your business and company better. We want you to be our partner in growth, and we want us to be your partner to be in growth as well, to help your business grow by working in the back end where you can focus on your growth side of the business. So we have a promo running for you guys. It's not too early to start planning your 2022 taxes. You want to get a provider in place before the end of the year so you can do effective tax planning before the year ends. So we have a promo running to help you with that now. You can get $500 off of your 2022 tax preparations. Okay, so I have a few couple poll questions. So I'm going to start it now. You have whole time until the webinar ends to fill that off at your ease. So I'm then going to do that now. Okay. It's there on your screen. You can do the polling as per your convenience and let us know what your exact thoughts on this. So our partners, so your team is critical to your success. And that's true whether you're building a startup or putting together a great webinar. We have got a number of great partners in the startup community, but for today's event, it's the best of the best. Early growth has always been focused on the team and the community. We know that together we go further. To bring you today's webinar, we have a very startup dream team with us. And to tell you more about our partners, we have our moderator, David Mashudi, with us. David has been a business development manager with Early Growth for a little over 3 years. Prior joining to Early Growth, he was a financial analyst at VIIP Capital. And in his spare time, David likes to hike, and even through hike both the Pacific Crest Trail and Continental Divide Trail in the entire entirety. Before we proceed, just a reminder, if you have any questions for our VC, please put them in the QA window, not the chat. So now here's to introduce our partner and to take over, Mr. David Mashudi.
Thanks, Kushbu. Good to meet everybody. Appreciate the kind introduction. If you could go to the next slide, I want to introduce our partners. Obviously, we can't do this alone. Building these webinars and presentations really requires a lot of collaboration. So I wanted to introduce our partner from Trinet. Jacqueline, if you would, please take yourself off of mute. We'd love to hear a few things about Trinet.
Hi, everyone. My name is Jacqueline. I work for Trinet. We do HR benefits for companies. We work closely with partners such as Early Growth Financial. So while Early Growth will handle the finance end, we will handle your people for retention growth. So thank you for having us.
Great. Thank you for being a part of this. Really appreciate your involvement. Kushbu, if you could go to the next slide, I'd like to introduce today's speaker. Everybody here to really hear from Michael. So I'd love to introduce Michael Cardamone. He is the CEO and managing partner of Forum Ventures. Took a lot of operating roles throughout his career, is an angel investor in addition to running Forum Ventures, and actually has invested in many companies, including Seedport's seed round, excuse me. He was one of the first 30 employees at Box. Led partnerships at Academics Direct, and comes to us with an MBA from Columbia Business School. So you can kind of see it in all of his portfolio work, but has a ton of success throughout his career, and very excited to introduce Michael today. Michael, before I have you take yourself off of mute and say hello, I'd like to go to the last slide too and remind everybody that our next Meet the VC is coming up. May 11th with First Mark Capital. So keep an eye out for that link, and would love to get some signups for that as well. So we can stop screen share and we'll go right into the discussion. Michael, if you'd like, I'd love to hear kind of a few words from you. If you could give a quick high level overview of who you are and who Forum is, and then we can kind of drive down deeper from there.
Yeah, sounds good. Thanks for having me. Appreciate it. Yeah, quick background. So I'm originally from upstate New York and live in the New York City area, but spent 9 years in San Francisco. As David mentioned, got pretty lucky and ended up at Box when it was like 25 people, spent some time there, then went to another startup that we grew to about 24 million in revenue. And then, started doing a little bit of angel investing and got fixated on the idea that there were all these kind of generalist accelerators like YC and Techstars and 500 startups, but there were only a few in the country at the time focused on B2B SaaS. And I had built a good network being early at Box, so I was able to kind of corral a critical mass of folks from kind of the first wave of SaaS companies in the Bay Area. So a lot of like early Salesforce, early Marketo, early Box, like CEO of Gainsight, CEO of Zuora, companies like that, or people like that, to raise our first fund in 2014. We were originally branded as Accelerator. We've recently rebranded to Forum Ventures. We can talk about that a bit. Fast forward now 8 years or so. We are on our fourth Accelerator fund. We've worked with about 250 companies through the Accelerator. We're adding about 50 to 60 a year now. Those companies have gone on to raise north of 600 million in follow-on funding and counting pretty quickly. And then about 2 years ago, we launched our first seed fund, which invests in both kind of follow-on investments in companies coming through our own Accelerator, but also the flexibility to invest in seed rounds and pre-seed rounds outside the Accelerator. And then about a year ago, we rebranded from Accelerator to Forum Ventures, which was a lot of, as we've grown as a platform from just being an accelerator to being, the way we think about it is like a platform and community and fund to support SaaS companies. We call it from internally from zero to sustainable. Sustainable can be defined as like kind of Series A or self-sustaining and profitable. Want to be there from that kind of very early, like very beginning stage to kind of Series A and support you through that life cycle. And so as we were evolving beyond being an accelerator, we felt like the Accelerator brand was very tied to that and wanted to rebrand to something that we felt better articulated the community approach we were and platform approach we were building to better support founders at different life cycles of their business. And so rebranded to Forum Ventures about a year ago.
Got it. Yeah, and I've worked with Accelerator and now Forum for almost 4 years now, and am always surprised and pleased with the quality of companies that come through there. And I know you worked at enterprise SaaS companies kind of throughout your career. What really led to the jump into being a venture capitalist? I know you mentioned doing a little bit of angel investing, but really, when was the moment when you were like, hey, I want to go full bore with this and move away from being, working for a company and actually investing into companies?
Yeah, it's so I really in business school, actually, I had no idea what venture was when I went to business school. And then I met a couple of folks who were in tech and in venture, and I got obsessed with the idea. I came from a pretty entrepreneurial family. My grandfather had his own business, even though he like dropped out of school in middle school, like built his own scrap metal business. And then my father had his own business, and I was working for him. And I had that kind of itch to be an entrepreneur, but felt like tech allowed you to do it in a much more scalable way than kind of the mom and pop kind of small business that my family had run. So I got obsessed about it, and I was talking to a lot of people in venture, and the advice I always got was like, go get operating experience first at a tech company. So I specifically, when I was interviewing, kind of tried to find a really early stage company, because my thought process was like, they would give me more responsibility than I deserved, and I would learn a lot. So, people are always like, oh, you're so smart to be at Box early. Like it was, I wasn't kidding when I said it was lucky. Like, I think it was lucky. I had no idea, how to predict whether they'd build a lot of equity value. But what I liked was they were giving me a role that I felt like was way more responsibility than I deserved, given I had no experience in tech, which allowed me to like build a great network and prove myself and like, work my ass off to kind of impress a bunch of people. And then, started angel investing and advising, and loved the intersection of like, I love being hands-on and helping companies with like go to market and on the advising side, but was like obsessive about investing as well. I frankly was interviewing for venture roles at venture capital funds and was getting pretty far along, but wasn't, didn't get a job for probably, I don't know, 6 months or so of trying. And I think my second ever angel investment was like the seed round of Flexport, which is now worth $8 billion or so. But it was like pretty clear early on that they were off to an amazing start, which gave me, I would say, a false sense of confidence that I knew what I was doing, because I had no idea what I was doing. But it gave me the confidence to say like, what, I'm just going to go try to start my own fund. And I felt like the Accelerator model was a great way to have that intersection of like investing plus really hands-on advising. So just went for it. I'm an identical twin, so I'm kind of like way too competitive. And so had a bit of a chip on my shoulder that I couldn't get a job, so decided to start my own instead.
That makes sense. Yeah, I mean, I feel like you have a bit of that entrepreneurial spirit kind of built into your DNA, but when you have a little bit of early success and maybe get a little bit of extra confidence, it pushes you in the right direction to take some more risks. So definitely interesting. I'm sure most of the audience has done the research on the fund, but I think there's a lot to unpack just because you are so involved at the pre-seed and early stages with the Accelerator piece, but then also can invest into the later stage seed round. Ultimately, I'd want to focus more on the seed fund at the end of the day of this conversation, but would love if you could kind of take us through what the Accelerator does for companies at the very early stages, how you are hands-on, and then how that translates into a potential seed investment through foreign ventures later down the road. And then maybe we can dive deeper into the specifics of this last fund that you're deploying now.
Yeah. Yeah. So the accelerator, we do, like I said, we invest in about 50 to 60 companies a year. Each company works with an MD. So we'll do an initial investment of 100K. Our standard deal is 100K for 7.5%, do it on a safe. We then kind of act as an extension of the founding team. So we're often working with a founding team, some early version of a product, although some are pre-product, some are more mature products, but like on average, an early version of a product. They may or may not have some customers yet, but we're often the first check in, and then we're in it with them. Like we're in the grind, we're acting as an extension of their team. We're working with them to figure out like, okay, what are your goals over the next 6 months? And then how do we work backwards to figure out like, what are weekly KPIs we can track to see how you're progressing against those goals? And then how can we as a team and a community support you in hitting those goals? And so a lot of that is like strategy, like tactical go-to-market stuff, like recording sales conversations, lead lists, like are you going after the right ICP? Are you doing customer development well? All that kind of stuff. And then helping you think through like what's the narrative and story around fundraising and how do you go out and do that, and then setting you up with a bunch of meetings to optimize your success around that. And then I would say the last part is just like being a founder is really hard from a mental standpoint. Like there's so many ups and downs and roadblocks and challenges. And so, you know, a lot of it is just like being in their corner and like being a sounding board. And, you know, sometimes it's they call and you're just like, do you actually want advice, or do you just need to vent to someone? Like we're here for you either way. But so I think part of it is just like being there for them and whatever that means, you know, at whatever stage of the business they're at. Like we've seen a lot just given the volume of companies we're involved in. So that's a bit more about the program. It's a 4-month program. And then we also have the programmatic piece you would expect from an accelerator, where we have mentors coming in to give like tactical kind of conversation, you know, talks on different subjects like demand gen and content marketing and sales, all that kind of stuff as well. But yeah, that's a bit more on how we work with the accelerator level. And then the seed fund, you know, as we work closely with the companies, we unfortunately don't have enough capital to invest in every one of the companies, but we're able to then kind of, you know, see which companies are really starting to get, you know, great feedback from early customers and have the pipeline grow and like get to know the founders a bit. And then as rounds are coming together, we can then decide if we want to participate with our seed fund alongside typically other investors coming into the round. And so that's kind of how the seed fund gets involved with the accelerator and follows on. And then, yeah, the current funds that we're currently deploying out of our second seed fund, we're in the midst of fundraising for now, but we did a first close already with about 40% of the target, and we're actively deploying. We write 2 types of checks out of that fund. One is kind of pre-seed checks, so think like sub $10 million valuations, and we're writing like anywhere from kind of 200 to 350 type checks generally, or you know, maybe 300. We're generally trying to get about 3 to 5% ownership in those checks. And then we're also writing what we call our core kind of seed investments, where we're probably going to average about $1 million check into rounds that are generally at like 10 to $20 million valuations. We'll occasionally make exceptions to that, and they're usually it's like a $2 to $5 million round. If it's on the smaller side of that, we could lead the round. If it's on the larger side, we're usually like the second largest check alongside a lead.
Got it. Okay. And then one thing that's always like that struck me when we were working with the accelerator was the rate of funding for companies that kind of go through the accelerator. I found that to be a pretty high number. What would you say, like, out of the companies that come through the accelerator piece actually end up raising a seed round?
Yeah, so I think the metric we track is how many raise $1 million plus within 6 months of the program ending. And I think the last I checked, that number was in the like 65% range or so. So yeah, and it's mixed. Some raise 1 million, some raise 3 to 4 million. It depends, but yeah, it's a pretty high fund through rate through the accelerator.
Absolutely, yeah. I mean, that's incredible. What do you think? Why do you think that is? I mean, obviously you're very hands-on and are getting the companies ready for that next round of funding. But what is it, about the disproportionate value that you add? How hands-on you are? Maybe it's the industry experience or sales connections, client connections that you have. What do you really think the secret sauce is that's getting that high fund through rate?
Yeah, it's a good question. I think a few things. One is we've been at this for a long time. We've worked with 250 companies, so we've had a lot of data points to learn from over the years. And in theory, hopefully that makes us good at picking companies that eventually will create like outsized expected value long term. But like certainly it's helped us get pretty good at understanding like what dynamics our downstream investors going to be looking for, and how do we best prep companies to like match those dynamics and optimize their chances of getting funding. And so I think we've gotten pretty good at that, and that comes down to like sourcing good companies and good founders, and then helping them create momentum while they're in the program, which we can talk more about. But it's revenue is always a great, like probably the best way to build momentum, but it's not the only way. And so even if you have long sales cycles or there's other aspects of your business, like there's other ways to build momentum. And so we just help you kind of build that momentum and tell the right narrative. And then, because we have so many companies, we've co-invested with hundreds of funds. We have a lot of relationships with funds and have a good understanding of like who likes what types of businesses and what size checks they write. And so, we play a lot of like matchmaker of like connecting companies to the funds that, they may not have otherwise gone after. Because the reality is like most founders, when you tell them, to go fundraise and build a list of funds they want to go after, like it's the same brand name funds every time on the list. And you're like, not everyone's going to raise from those brand name funds. And so part of it is like navigating to other funds that maybe you haven't heard of, but are still really good and more focused on like your exact stage and type of company. Right. So it's just getting good at that kind of stuff as well.
Yeah, I mean, that's huge value that you're adding. And, a lot of those larger funds, I would imagine, aren't going to be as hands-on with all of their investments. So finding an investor that's, strategic and can add a lot of value at those early stages is going to be very important. Just to be clear too, I know a lot of the folks in the room are probably at the stage where, they would either be a fit for the accelerator and some maybe at the stage for the seed fund. You don't, in order to kind of get investment from the seed fund or be looked at from the seed fund itself, would they have to go through the accelerator, or are those two things independent of each other?
They're independent of each other. Our first fund, our first seed fund, we made 31 investments, and it was about 50-50 that came from the accelerator and outside the accelerator.
Great.
More when it's outside the accelerator, it's more likely it'll be like part of an institutional seed round. We will occasionally still do pre-seed, but it's usually if like they already went through another accelerator, so the accelerator doesn't make sense, or they already have some capital for a pre-seed round committed, so the accelerator doesn't make sense for that reason. Then we'll potentially still jump in at kind of that pre-seed stage. But a lot of times it's like at the seed stage where it's a, like I said, like a $2 to $5 million type round. When we're doing stuff outside the accelerator, seed fund 2 will be a similar mix.
Okay.
It'll be about 50-50.
Similar mix, but probably going to do some more leading of rounds and being more involved.
Yeah, just the check size is going to be a little bit bigger because the fund size is bigger. So so it gives us the opportunity where we potentially could lead if it's a smaller seed round.
Yeah. When you mentioned you're 40% in, got 40% of the first close, what's the total size of this second round or fund?
So we're targeting 40 million. It'll probably end up somewhere between 40 and 50, I think.
Okay, great. And you mentioned your average investment side there. Do you have a geographic preference? Is there an area where you tend to focus, or has that gone out the window with COVID?
Primarily focused on North America. I would say 95% of the deals are probably going to be North America, so US, Canada. we will very occasionally, out of the Accelerator, we do a decent amount of international across like Latin America and Africa and Europe. We will very occasionally do that out of the seed fund, but primarily North America.
Got it. Okay. Obviously focus on B2B SaaS. Do you typically require a board seat when you would lead a round, or is that something that you typically haven't asked for?
Yes, we will. If we're leading, we'll probably take a board seat. Even when we're not leading and are like the second largest check, depending on the round dynamics, we potentially would ask to be like a board observer, but we're not. It's not like we're not fixated on it. Like it wouldn't be a deal breaker for us. But we would probably have a slight preference to being at least like a board observer.
Yeah.
So yeah, that's kind of how we think about it.
Okay, that's helpful. So I think it'd be nice to walk through what the decision-making process, and maybe that looks, that looks a little different for the Accelerator versus the seed fund, but walk us through what the diligence process looks like, how long it typically takes, and then maybe like what are the key steps in that process, just to give everybody an understanding what that might look like.
Yeah, it's a little bit different for the Accelerator and seed fund. So I'll talk about the seed fund because that's where I spend most of my time now. So yeah, usually we get connected to a company. Either they come in cold, inbound to us, or we get referred to them, or get an intro, or however we get connected to them. Where it doesn't have to be through a warm intro, although we definitely get a lot of referrals. Someone on the team will take an intro call. If we think that goes well and we're interested and intrigued, we'll spend a little bit more time on it. We'll discuss it internally at our investment committee meeting. And then we'll do a second call with more people on the team to kind of dig in more on like some of the stuff we didn't get to in the first call. And then we'll talk about it again internally. And then depending on if we still have questions or not, we may do a third call, or we may just go back and forth async with questions. So we've had companies where like we'll ask questions and they'll respond with like a Loom video and stuff like that. And then the final step would be, like customer calls. We might do, especially if it's like a core seed investment, we might do like personal reference calls on the founder from like people they worked with in the past. And then we will leverage our network to get feedback on, like, if we have people in our network who could be potential customers, we'll leverage those relationships to get feedback as well. And then we'll make a final decision. And so, it depends. We can move pretty quickly if we need to for a round coming together. If there's not a ton of urgency, it could take a few weeks. It just depends on the scheduling and how fast the round is coming together. But that's generally the process. And then, yeah, I don't know if it's helpful. I can talk through like some of the things we look for, which I think are pretty broadly like applicable to just fundraising strategy in general. But I don't know, whatever you think makes sense.
That was my next question, would love to understand the metrics that you look for. I know you mentioned early revenue is a key, but yeah, what are the KPIs that you're tracking, and what are you looking for to that kind of gives you that aha moment that this really makes sense to invest into?
Yeah. So I mean, I would say like we're not fixated on there having to be revenue. So first and foremost is founder, but that's like such a like every VC says I want to invest in great founders. So like, what does that actually mean? Let's break it down a little bit. Is we try to look for founders who kind of three things. One is like founder market fit. Like, why are you building this? Like, what unique insights or experience do you have in your past that are leading you to want to build this product? So we look around kind of founder market fit. Two is, can you talk with like clarity and conviction around how your market's evolving and like why you think you can win in this evolving market, and be like really concise about it and have a high conviction. And like, we may not necessarily agree with everything you say about how the market's evolving, but the more conviction you have and the more data points and validating points you have around why it's going to evolve that way and like why you think you can win in that market, the more inspiring you will be as a leader, which will help with fundraising, but more importantly, like, will make it easier to recruit people because they'll see the vision, they'll see how you can win in this market and how you can build a big company. So, I hate to say this, like, I don't mean to say it in like an arrogant way, but part of it is like, we want people who we would be excited to work for if we weren't doing this. that like can really inspire you to like be like, wow, you're going to build a big business here.
Yeah.
And like, this is exciting. And like, you clearly understand, like if you squinted and looked 5-10 years ahead, like you kind of see a path to like how you could build a really big business. So that's one thing. And then another thing is just like, are you obsessed with the business? And that doesn't have to mean you're working 100 hours a week, because like burnout is real and mental health is like important, obviously. But you can just tell when people are like obsessive about, I think it's hard to turn it off in their brain. Like I have a hard time turning off foreign ventures. I have 4 kids. Like I try really hard to be like present when I'm home and like put the phone away, but like it's hard to like turn it off. And so we're looking for people like that. And so some of the things we'll look for is just like, how quickly are you responding to things? How thoroughly are you responding to questions people are asking you? You know, if I ask you like, what are the biggest opportunities in your pipeline? Like you should know that, frankly. Like you should be obsessing about like, how do I close this like big customer that's in my pipeline? And like sometimes founders won't know. And to me, that's an indication like they're not like really, their heart's not like really in it. So looking for things like that. So that's first and foremost as founder. Like we really try to spend a lot of time thinking about the founder and the founder narrative and like, why are they building this? And, you know, how kind of motivated are they? How big are they thinking? What is their vision? Do we think they're going to recruit great people? So that's one. Market we look a lot at as well. So not just size of the market, but like market dynamics. Is there like a tailwind that is kind of driving growth in this market? Do we believe like if there's always going to be like a thesis or hypothesis you need to believe to be true for this to be a big business, and like, do we believe that? Do we think that could be the case? And then you know, after market we look at then customer validation, which the best form of that is revenue, like actual customers paying for it that are like raving fans of the product. But you know, we don't always have that luxury. So sometimes it's, you know, is the pipeline growing? How are you growing the pipeline? How quick, like what do the sales cycles look like relative to the pricing? Can we validate it with potential customers in our network? You know, even if you don't have customers yet, can we like introduce you to people, which ends up then being also helpful to the company? So we'll look at a lot of stuff like that. And then we'll look at like, what are the like major risks that we think would cause this business to fail? And are there any data points that they've proven out that would help us get more comfortable around those risks? Like there's always going to be risks at early stage, at this stage of companies, but you know, have you proven in some way, do you have any data points in some way to help us get like mitigate some of those risks or get more comfortable around those risks? So those are kind of the 4 things that we tend to evaluate and look at. But yeah, happy to dive into any more of that in more detail. If it's helpful.
Yeah, I mean, there's a lot to unpack there. That was kind of like one of my line of questions was around like, how do you evaluate the founding team? It sounds like you answered that very, very well. Be curious to understand, are you only looking at like multi-founder companies? Have you ever invested in a solo founder entity? I've heard investors say like, oh, I won't touch a company that doesn't have like a group of co-founders. What are your thoughts there? What have you learned from maybe the two and you know,
yeah,
love your thoughts.
We will do solo founders. It just depends on the circumstances, right? Like if it's a business founder who doesn't have a technical background and they're trying to build a very technical product, like that's not going to work, or that's going to be very difficult to work. Like if they're trying to outsource dev on a highly technical product. But if it's a solo founder who has a business background that's like relatively low tech, and it's more about some unique insight they have or connections and network they have, and they can kind of get an early product built externally, you know, we're okay with that. So yeah, it just depends on the situation, but we're open to solo founders. It's not a hard and fast rule for us.
Got it. Okay, good to know. You talked about your investment process. Maybe it hasn't changed much, but I know COVID has affected many things in life. You know, typically investors will want to meet in person. Have you ever done an investment virtually without meeting the founder in person? walk us through like how COVID has kind of affected the investment process, and any advice that you can give for founders how to navigate that, would be super helpful.
Yeah, we've done a lot over Zoom. We had done a decent amount over Zoom anyway through the Accelerator over the years, because we've invested in companies all over the place and not all of them are going to fly to interview with us. But it certainly makes it a bit harder to evaluate the founder and like the nuances of that, which is why like when they go through the Accelerator, we get, a lot of like hours and hours of interactions with a founder to like evaluate them. Whereas if it's a company outside the Accelerator, it's a more condensed time frame, and then therefore a little bit harder to read that. So yeah, that makes it a little bit trickier, but we just try to, we try to evaluate different forms of communication, like how is their kind of written communication, how are they on Zoom, and we try to get as much kind of, that's why we'll do like references with people they've worked with in the past. So we try to get some of that to make up for like what is harder to do over Zoom than in person on kind of reading people.
Got it. Okay. So I'm sure you've heard a ton of pitches. Any advice that you could give founders on, or I guess let me phrase the question this way. What are some of your pet peeves when it comes to hearing founders pitch, and advice or common mistakes that you can, share with us? And how do you, any words of wisdom that you can provide for our founders on, how to be effective when pitching investors? What are some of the pitfalls that you run in, that you've seen, and how can they avoid those?
Yeah, it's a good question. There's probably a lot I can say, so I'll try to stick to a few. So one is, I think a lot of founders kind of feel like they need to stick to like a certain order of their deck that like they get a template of and they stick to that. And I think the reality is like founders see a lot of pitches. You should lead with your strength. And sometimes that's traction, sometimes that's team, sometimes that's, some shift in the market that's creating like a once in a lifetime opportunity. But like, don't be set on like some template and the order people think you need to be in on the deck. Like, lead with the strength, get their attention early, and then kind of tell the narrative around like, if it's great traction, like show the great traction, get their attention, and then walk with the narrative around like, here's why we have great traction, and here's why it's working, and here's how big the market, oh, by the way, like the market's enormous and like we're the right team to do it. So that's one. Two is I see a lot of founders put like a whole slide on like, look at all these amazing advisors we have. And sometimes that's helpful, but if they ever do any angel investing and they're not investing in the business, it actually is like more of a red flag than helpful, because like, why are all these people who have invested in startups, advising your company, but they have no skin in the game. They're not advisors, and like maybe they get some equity as being an advisor, but you're just being careful around like the signaling around that. I think a lot of people assume it's like a really good social signal, and it can be, but usually only if they're also angel investing. If they never invest in companies, fine. Maybe they're not, maybe it's like an industry vet, you're like vertical SaaS, you're building vertical SaaS, and it's like an industry veteran who doesn't really invest in tech, but like is a good social signal in your industry and can unlock a lot of doors. But that's another thing. And then, I think just like, again, a clear, thoughtful slide around market size. Like, don't give me, this is definitely a pet peeve of like people who just say like, let's say you're selling software into like restaurants and you're like, well, restaurants spend $50 billion on software, so like that's the size of our market. When like really you're going after like some small subsection, like give a much more be much more thoughtful around how you're thinking about your market size. Like, how are you pricing it? How many types of customers are there that you could sell to? And like, what is that more bottoms up kind of calculation of market size? So yeah, those are some of the things. I'm also like, people on my team actually give me a hard time about this, but I'm like a pretty big stickler on like design of the deck as well. I just think it's a first impression, And if you don't put the effort or energy or resources into making the deck look nice, like it potentially sets the example that like, are you going to be paying attention to how your product looks and like what sort of first impression that makes to your customers. And so I don't know, I still am not sure if if I should be caring about that, but I tend to and get teased about it a bit. But yeah, those are some of the things.
Yeah, if it's an indicator of other things, then that's something to pay attention to. How thoughtful are you with?
I haven't proven it is actually correlated to that. I think I just assume it is, which is maybe not the right thing to do. But
Well, if you enjoy seeing it a certain way, then I mean it's a good thing to take into it. Make sure that everything all your product and all your output looks nice at the end of the day if you're putting it out there in the world.
Yeah.
You talked a little bit about what you look for in a founding team. So my next question is really around like, what do successful founders do really well? You've talked about that in looking for product market fit, or founder market fit, having conviction about the business and being able to communicate that clearly. What other things do you think a successful founder really does well? When you look across your client, your portfolio base, what have you found that rings true over time?
Yeah, so I think it's two things that like really come to mind. One is an obsession around finding product market fit. So really like customer development, is it the right customer? Are they like wildly satisfied with it? Like really making sure you have raving fans before you go try to scale and really spend a bunch of money on acquisition. So like being like obsessive about that, about like talking to your customers, being really in it. Like, are they getting the value you thought they would? Is it moving the needle for them? Like, are they like, could they not live without it? Like you really want to spend a lot of time on that, like over index on kind of early customer success and making sure you have raving fans. And then I would say the other is understanding how impactful, both from an execution and fundraising standpoint, making good hires is. So a lot of founders, like, your head's down, you're moving fast, like you don't want to spend a lot of time interviewing a ton of people and like process, like you don't want, you're usually like pretty cheap, you don't want to spend a lot of money. And so like you make quicker hires that maybe are like good stopgaps, but maybe aren't the like really the best people long term to set the culture and hire great people behind them. And so I think like the ones who over index on prioritizing recruiting early, I think tend to be able to move faster, even though it's like going slow to move faster long term. So that's another thing that I've seen. A lot of our like successful CEOs are like really focused on prioritizing recruiting much earlier than you would think they would be. Basically, as soon as they have like any resources to do it.
Is that because a good CEO knows that they just can't do it all themselves? They have to surround themselves with the right people so that they can pass off, the core of running the business, if you will?
Yeah, and I think it's also, the reality is like your early hires are going to be the people that are going to help recruit the next wave of employees and set the tone and set the culture. And you want to set a high bar early so that high bar kind of maintains for as long as possible.
Mm-hmm.
So yeah, I think it's being able to pass things off, but it's also just thinking long term around that. And then the one other thing too that I'll add is, the founder. There's a lot of founders that I've seen go on to be successful, and we work with a lot of like first time founders who have are sometimes like pretty green around tech and building tech companies, but the ones that are like really dialed in around like, how do I continue to grow as a leader, who are like proactively seeking out connecting with founders who are like one stage ahead of them to understand like, okay, I'm at seed now, like I want to connect with a bunch of Series A founders to think about like, once you get to Series A, like how does your time shift and what changes, all that kind of stuff. Like the people who are very proactive about that and like are very like intellectually curious and want to grow as a leader, I think tend to like, I think there's some correlation to success there. So that's another thing that I'll add.
Okay, no, that's helpful. Thank you. I think that's a good segue into one of my questions, which is, what are the key differences between a company that's at that seed stage versus a Series A? And then, like, how do you help companies get to that Series A level? Would love to hear your answer on that. And then also just understand, how involved operationally are you? Like, once you make a seed investment, how often are you talking to your founders? What kind of advice and support are you providing, or are you hands off and don't like to be prescriptive? But would love to hear from you on that side.
Yeah, it depends on the company and like what they need. So anytime we make an investment, first we introduce them to our platform team, get them connected into our community. We've got a Slack channel with like 500 founders, anywhere from like C to Series B, Series C. So there's a lot of just like activity in there, people asking questions, best practices, sharing contacts, like things like that. And then we also have built out a portal for our founders who can log in and they can see like corporates we're connected to and who our mentors are, and they can request introductions to other portfolio company founders or everything. We use a bunch of products to kind of automate a lot of the like connecting people in our network. So they get connected into like the whole team. So it's not all on me or other people, like one other person on the team. Like we have a whole team that helps support the founders. And then depending on what the founder feels like they need or what they're going through or whatever, like it could be I set up a recurring call every other week, or it could be once a month, or it could be once a quarter. It just depends. And then usually once they're gearing up to raise an A, we get much more involved again to help them with like the narrative, the pitch, the like getting the data room together, and then helping them make intros into other funds. So that's kind of how we engage with like the seed fund startups.
Yeah.
It's not as hands-on as the Accelerator, obviously, but we're still pretty hands-on supporting across like customer introductions. We're starting to build out more resources to help on like the talent acquisition side and recruiting side. And then obviously fundraising, going to Series A.
Yeah, I mean, that's great. That I didn't know that you were so hands-on when the company's going out to raise their Series A, especially in building the data room. What do you think the key differences are? Like, what are the things that you're talking to your client, your portfolio companies about? What metrics are you wanting them to hit? What are you seeing out there in the market that Series A investors are looking for? And what are some of the key, I guess, KPIs that folks are trying to target?
Yeah, so I hate, I don't like saying a revenue number that you need to hit, because like I've seen companies at 2 million in ARR struggle to raise an A, and I've seen companies raise an A with like 400K in ARR. So, it's hard, it's not necessarily tied to revenue. So a lot of what we talk to our founders about is like, what do you need to prove to optimize your chances of raising a good A? And that's different for every company, depending on if they're in a crowded space, like generally you do need to prove more revenue, more traction. Like, have you won deals over competitors? Do you have a clear understanding of why you're winning those deals? Do you have expansion opportunities? Like, there's more to prove on the traction side if it's a crowded market. If it's a less crowded market, like maybe you don't need as much revenue, but you need to make sure that the early customers are like raving fans. That, maybe there's like a good amount of expansion revenue. The pipeline's growing quickly. You've got a clear understanding of like, if you pour X dollars into these acquisition channels, you're going to get Y dollars out. Like you're starting to get some of those early data points. Mm-hmm. But yeah, it's all about just like, what do you need to prove? Like sometimes there's things you need to prove in the market. Sometimes there's things you need to prove as like, if you're a team that doesn't necessarily have like the pedigree that like a lot of VCs look for. You might need to prove that you've made a key hire or two that they're impressed by. So like, it's all about what are the things you uniquely need to prove as a business to get people to get excited about what you're building. And then is there a clear narrative to building a, billion plus type company? Because, once they're writing checks, $10 to $20 million checks at like 50 to 100 or 40 to $100 million valuations, like they need big outcomes. And so they need to believe that you can build a really big company. So a lot of it is just in the narrative of like getting them excited that if this works, it could be really big.
Excellent. Okay, that's super helpful. This is a fun line of questioning. You know, every investor loves talking about their success stories. Walk us through an example of when an investment that you made failed, and how you handled that, what you learned from it, and most importantly, how you handled the investment and move on from it.
Yeah, it's a good question. I'm trying to think of a good example. I mean, certainly we've invested in hundreds of companies. We've had a lot that didn't work. So I'll share one. I don't know if I want to share the name of it, just because I don't know if they would care.
That's totally fine.
I invested in one as an angel investor it was early in Accelerator, but they were already in YC, so we couldn't do it through the Accelerator. We didn't have the seed fund yet. And I ended up investing, and the founders were great. They had great investors around the table. But I remember when I tried the product, it was like, it was a little buggy, which is fine. Like we see a lot of early products and like expect that, but like it required me changing a lot of workflow, and like I wanted to use it and I still was like not using it. Like I had it downloaded and I was like trying to use it. It was like a productivity type tool, and I just found that I wasn't really using it, yet I still invested. I think because of like the momentum of like YC and the hype around it, and like the founders were really good. And then they raised the round from Excel afterwards, and I was like, oh, all right, well, maybe they'll figure out the product, or like maybe I'm just not the right user. And it turned out like they struggled for years to get people to actually use the product. And like they were able to raise money because the founders were really good, and they poured a lot of money into like acquisition channels before they actually had customers that were like highly engaged and using it. And so I think that was just an example of like they weren't focused enough on making sure customers were like really, really like engaged and loving it. And instead, because they had access to capital, they like tried to grow ahead of that and ended up with like a ton of users, none of which were really engaged. They had a really high churn, and then like struggled to raise the next round because the metrics looked really, really bad. So I think that was one where it was like a good learning experience. And also just like kind of gut of like, not that I'm not always going to be the right user of a product, but like I probably should have questioned it a little bit more, given I wanted to use the product and like struggled to use it.
Yeah, don't ignore a bunch of red flags around product and design when, you know, because you're enamored by the investors that are investing. It seems like almost you know, you didn't take your best judgment to heart because you felt like, you know, it seemed like an exciting space, maybe some FOMO kicked in a little bit.
Sure.
And didn't want to miss out on the ride as well. Interesting. Yeah, that's interesting. That's a different answer than I've heard before. That's great. We have some questions in the chat box, and I know Michael had kind of posed the question: does SaaS/fintech focused on enterprise fit within your investment thesis? I believe it does, but would love to address that piece of it. And along that same line of questioning, what excites you right now? Like obviously you're focused heavily on B2B SaaS, but in that realm, what do you see that's exciting? What's coming in the forefront that you're really excited about? And where do you see the most disruption kind of happening in the space?
Yeah, so we do a lot of fintech, or a decent amount of fintech. We've done a decent amount recently. Like we did one called salsa.dev that's like embedded payroll API. We've done some, a decent amount of fintech across, as long as it's B2B. We did another one that was like, enterprises that want to hold kind of crypto on their balance sheet. It's like a back office kind of accounting tax software for big enterprises who want to do that. So we do a decent amount around that. Yeah, I would say more broadly, like things we're excited about. I spend a lot of time looking at like supply chain logistics, e-commerce enablement type stuff. We've done a decent amount of investments around there. Like I said, was early in Flexport and know the founders there. And I've just spent a lot of time over the years kind of watching that story unfold and then, making a bunch of investments in and around kind of supply chain. And now Flexport is pretty actively investing out of their venture arm. So we kind of share notes a bit with them at times, and have co-invested with them a couple times now on deals. So that's one area, and e-commerce enablement, like I said, we do a lot of I love like vertical SaaS companies. So that there's the obvious verticals of like construction, prop tech, and like health tech and fintech, but even more niche verticals, like, oftentimes there's not a lot of competition. It's usually like dominated by a couple incumbents that are often backed by like private equity firms who are not investing in products. And there's an opportunity, even if it's like a relatively niche market, to like build a big business, especially if you can start to layer in like fintech stuff and over time and start capturing like transaction volume that maybe is often done offline and you can kind of move it online. So we look at a lot of like vertical SaaS type companies as well. And then, there's obviously like we do a decent amount around future of work, which is such like a vague, broad thing, but just we tend to believe like the workforce is moving much more distributed and remote, and that's going to inevitably create a lot of opportunities for new businesses and new ways of doing things. And so we've made a decent amount of investments in and around like things that facilitate that. And still see a lot of that. Those are some of the, and then like, applied AI, which is kind of a broader topic, but like next generation of like, maybe there's big SaaS companies that have been built in certain areas, but you're building like a new, more automated version of those that are significantly better and can kind of be the next generation of those categories. So we'll look at a decent amount of stuff like that as well.
Interesting. Okay. Great. Yeah, quite a broad range of focus, definitely. I am keeping an eye on the chat box. So if anyone has any questions that they'd like to poke in, I know we're running up against time here. So would love to open questions up to the audience. If there's anything that I haven't asked that are top of mind for you, feel free to pose a question, and I can certainly ask it. Kushbu, I'm not missing any questions on the Q&A, am I?
No, I guess we have covered. We just got one more. What is the best way to contact you, Michael? I hope they would need your contact details now.
Yeah. I'm just I'm Mike at forumvc.com. I'm on Twitter, MG Cardamone on Twitter. Those are probably the two best ways to get in touch.
Great. Yeah. I mean, I know you mentioned that you don't do, you have made investments into, companies that haven't been given via warm introduction. So I would imagine you're responsive to cold outreach as well.
Yeah, for sure. Yeah.
Cool.
Yeah. And I see a bunch of other questions from Phil. Early so what we consider TAMs, detail do you like to see the analysis? If we're digging in, so to answer the first question around like TAM, SAM, SOM, like all the acronyms of descriptions of how to do your market, how detailed do you like to see the analysis? We, in the deck, it doesn't need to be overly detailed, just enough detail that it shows that you were thoughtful around it and that you're not just quoting some large number of like an aggregate market that is like somewhat related to you. And then if we're digging in, we do like to probably dig in a little bit more detail around like, how are you coming up with those calculations? And like, do we believe the hypothesis around them? And then for pre-revenue, what introductions can you make to early adopter customers? We're a disruptive network security company. We have people on our team who are dedicated to kind of building out relationships with corporates. We've got what we call like an innovation forum, which is a community of kind of innovation folks and heads of business units at a bunch of kind of mid-size and large companies. And then we also have a lot of LPs that are CEOs of like pretty large SaaS companies. And then we've got 500 founders of startups. So we usually have a pretty big and broad range of potential customers, depending on who you're selling into, that we can run products by and try to make introductions for. So we try to do a lot around that and have like a team of people kind of focused on helping to do that. And we track like introductions and everything. I think we've made, hundreds of introductions over the last couple of years. And then has Forum invested in any tech startups with diversity, minority founders? Yes. I mean, diversity is a hugely important thing for us. It's a KPI we track. We have a very diverse team and are, have a pretty diverse portfolio relative to like the rest of the kind of broader kind of tech market and data that we see across the market. And it's an area that we spend a lot of time thinking about and tracking and like constantly iterating and improving on. But yes, we've invested in a lot. Yeah.
There's one question here about when a company is approaching a saturated market, how do you decide this one is different? Any thoughts there?
It's really hard. We have a hard time, if it's like a really crowded market, we have a really hard time at pre-seed especially, and like sometimes seed unless they have a decent amount of customers that we can talk to around like trying to figure out who the winner is going to be in a really crowded market. Because even if the reality is like, even if you have built an incrementally better product, if it's a crowded market with a lot of people going after the same budget, it's just so hard to rise above the noise there. So we probably would want to see a really strong skill set around like growth marketing and marketing in general, to give us like, help us kind of, again, get more comfortable around the risk of like, can you rise above the noise and get people to really test your product so that you have the opportunity to prove that it's incrementally better. Even if if you can't get people to use it, it doesn't matter. So it's a harder thing for us to underwrite at pre-seed, but that's some of the things we'll look for is like, do you have proof points that once people try it, they like think it's significantly better than the other options? And then do you have skill sets on your team that lead us to believe you can get enough people to try it to like get the snowball going? I think you're on mute, David.
Yeah, sorry. No, I appreciate that answer. That's excellent. I know it's probably not easy trying to wade through a very saturated market and figure out which one the winning horse will be in that battle. But great insight today. I know we're a little bit over time, so Mike, I want to be very conscious of your time. We've shared your contact info. Folks can definitely reach out and connect with you directly if there are more questions or you'd like to learn more about Forum Ventures. But want to wrap it up and pass it back over to Khushbu. Michael, thank you so much for your time. Pleasure getting to know you better and talking with you about Accelerator and now Forum Ventures. It's been a pleasure to work with you.
Thank you so much for having me. I really appreciate it and appreciate the partnership with Early Growth over the years. So thank you very much.
Of course. Khushbu, I'll pass it to you.
Thank you so much, Mike. Thank you so much, David, for such an interactive session. And I'm sure that we have covered almost everybody's questions. Otherwise, I have dropped the LinkedIn contact for Michael in the chat box. You guys can hop on and even contact him through your convenience. So you guys can find us all over the interwebs. Just a reminder, the webinar will be available within 48 hours on our YouTube page. We appreciate you joining in today. With that note, we conclude today's webinar. Thank you so much.
Thank you.
Take care, guys. Bye.